What's up, guys? It's Dan from Coin Bureau Trading. Today we're going to take a look at whether the CME gaps on Bitcoin, Ethereum, and Solana have been closed, and why, if they have been closed, we're probably going to see a massive rally in the next day or two. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So starting off, guys, with the CME gap for Bitcoin. So this is where things get a little bit interesting because, of course, the CME gap has not been completely filled. And technically speaking, basically Bitcoin would need to fall down to around 111,000 for that CME gap to be considered filled. That could still happen in the next few hours here. But so far, we only have a partial fill, which is not the best sign. But what's interesting about this is that, as you'll see, the Ethereum and Solana CME gaps have been filled. But we'll start with Bitcoin here. So again, only partial fill here. Is it possible that Bitcoin could fall a little bit lower in the short term here? Yes, but I don't think that changes the fact that the pattern that we're seeing here, guys, is a nice kind of recovery pattern that's likely to resolve to the upside in the next couple of days. We're looking at Bitcoin here on the daily, and you can see it's kind of an inverse of what we saw back in, I guess, earlier this month when there was that huge liquidation in October. We're basically seeing an inverse of this pattern, and in the next day or two, we should see Bitcoin starting to squeeze to the upside with the Bollinger Bands here. So when these two bands come close, that means there's a squeeze, and that means that there's about to be a big volatile move either to the upside or to the downside. And again, I do think that move is going to be to the upside. Moving on to Ethereum, you guys can see here that the CME gap in this case was arguably filled. And this is where things also get a little bit tricky because on the CME, like on the actual CME, the gap was maybe like, off. It was not completely filled. Maybe it's off by, I don't know, whatever it is, like $10 or $20. But if you look at Ethereum's actual chart, that CME gap was filled because Ethereum did fall into that, whatever it was, 3,940 or 948 or something like that. But Ethereum did fall down to that level. And again, we are seeing an inverse of what we saw earlier this month in October, where it looks like we're going to get a rally from this level. What's really nice is Ethereum is holding the daily Bollinger Band moving average. It's interesting how there's confluence between this daily Bollinger Band moving average and the CME gap. But in any case, the key takeaway being is, again, we're seeing a squeeze here on the Bollinger Bands, which suggests that there's going to be a big move in Ethereum in the next day or two. And of course, it does look like this move is going to be to the upside if we do see an inverse of what we saw earlier this month. Moving on to Solana, same story. We can see here on the 4-hour that Solana pretty thoroughly closed the CME gap that it had over the weekend. That CME gap level was only somewhere around 194. Right now on the CME, it's trading at around 191, which is interesting because, of course, on Solana's chart, it did, again, fall to that CME gap, but it is trading a little bit higher on the spot market. It doesn't change the fact that, again, we're seeing an inverse of this pattern from earlier this month. We're seeing the Bollinger Band squeeze even more in the case of Solana, and it does look like the squeeze is going to resolve to the upside with a massive upside move in the next couple of days. Of course, that's not guaranteed by any means, but with the Fed meeting coming up and with the Trump-Xi meeting coming up tomorrow, the Fed meeting is later today. We'll get to that in just a second, and the Trump-Xi meeting tomorrow, that should be enough to basically take risk assets higher. So if you guys are looking to potentially trade that, it's going to be probably a pretty big move either to the upside or the downside, with upside looking more likely right now, then do check out the description, click that more button. You'll see this first deal here, BitGet up to 50,000 USDT deposit bonus. Click on that link. It'll take you to a page that looks like this. As you guys can see, the Coin Bureau does have a partnership with BitGet. So this is kind of like a sponsored thing, let's say. But the thing is, guys, that on a personal note, I do think that BitGet is an awesome exchange. They have spot trading, they have futures trading, they have tokenized stocks, they have on-chain trading. It's an exchange that I've used personally and I think is awesome. It might not be the right exchange for you, but maybe it is. And the only way you can find out is by signing up. Might as well use our code. See if, potentially you can get enough trading volume to get some of these bonuses. Of course, you do have to do quite a bit of trading, but again, just check it out, see if it's right for you. And again, just because it's a great exchange does not mean you should be keeping all your crypto on an exchange. I'm going to say this in every single video. You need to keep your crypto in your personal wallet unless you're actively trading. But with that in mind, do check out this BitGet deal in the description or in the comments. It helps us out, it helps you out, and who knows, if you really like the exchange, then maybe you'll get some of these awesome bonuses in there as well. So anyways, guys, moving on to the macro. So of course, as you guys know, the US dollar, as measured by the DXY. This is something I've been watching very closely. We can see that the DXY is still on the brink of breaking down. Like basically most assets, when they break down below key level, we're just now seeing kind of like a retest of the Bollinger Band moving average on the 4-hour. So basically the DXY fell below that level. Now it's rallying back up to that level. You can make the argument that it's also rallying back up to this long-term resistance trend line here. And what I do expect, or rather what I hope, is going to happen in the next couple of days as a result of the Fed meeting and as a result of the Trump-Xi meeting, is that you will see the US dollar basically finally break below this support line here. And when that happens, then basically everything is going to rally, especially risk assets, because when the US dollar goes down, everything else goes up, because that basically increases global liquidity. And when the US dollar, of course, goes up, then everything else goes down, because it's kind of like draining global liquidity. And I'm sure many of you are wondering, what's going to happen with the Fed meeting later today. I think that it's pretty likely, and I actually should have included this in one of the tabs that I show, but it's pretty likely that the Fed is going to be even more dovish than people are expecting. And the reason is that basically Nick Timiraos, I don't know if you guys know this, there's a journalist named Nick Timiraos from the Wall Street Journal. Many people call him the Fed Whisperer because he seems to have like insider info on the Fed. And he posted an article yesterday explaining how the Fed does not want to have the same issue that it did in September 2019. And basically what happened back then was that there wasn't enough liquidity in the system, and there was basically a hiccup, let's say in these like lending markets, like overnight, like these repo markets, all that complex stuff, right? There was a problem in September 2019 because there wasn't enough liquidity, and the Fed had to kind of like step in with some emergency stuff, and the Fed does not want a repeat of that. So as a result, they're probably going to be more dovish. They're probably going to end QT. This is stuff that's not currently priced in, and everyone's saying is going to be a sell the news event, is going to be super bearish, but I'm not so sure. I think that the Fed, again, they're being very careful here, especially with what's going on in private credit. They do not want to, cause any panic, and they want to support the markets with liquidity, even regardless of what's going on with this inflation picture. And of course, inflation last Friday did come in slightly cooler than expected. So long story short is I actually think the Fed will be more dovish than people expect. And of course, that should help basically with this upside squeeze that we're starting to see potentially here on Ethereum, Solana, and of course on Bitcoin as well, and other altcoins. And of course, that begs the question, what's going to happen with the Trump-Xi meeting? This is where things get a little bit trickier. Like, there's part of me that wonders, I'm a little bit concerned, to be honest, that, at the last minute, maybe Trump will do something unpredictable and say, oh, the meeting's off, like I changed my mind. But, realistically, if he went all the way out there just to have all these discussions, I don't think he went out there just to scrub the meeting and come back. I think the reason there was a really good analysis by another guy named Joseph Wang. He basically said, look, like Trump would not travel out to Asia if he didn't think that he would walk away with some awesome deals, with China and Japan and all these countries, which you guys have probably heard in the last few days. So it looks like Trump is really adamant about, securing a deal. I think even yesterday, Jensen Huang from NVIDIA was saying that there's going to be an awesome deal, and I'm sure it's going to be great. It looks like everything is going to go well. And if it does, guys, then this is going to kind of remove, I guess, as the Guardian here says, it could end months of global economic chaos. Well, more specifically, I would say it would end months of kind of people being like on the, cautious and like scared and not sure what's going to happen next. As soon as there's clarity, and this is the thing that people don't understand, even if this trade deal, is something that is, not as good as some people were expecting, so long as there's clarity there, that's all that matters. What investors hate more than anything is uncertainty. So long as there's certainty, then they can plan for it and they can price around it. Like even something like Russia's invasion of Ukraine, once it happened and once they understood the scope of the conflict, everything was able to keep rallying. Not that this is necessarily the same thing, but similar principle, you know what I mean? So right now it's been super uncertain with the tariffs, but as soon as that certainty is there, and of course the last missing piece there is China, as soon as that certainty is there, then you're probably going to see risk assets rallying a lot more. As soon as that certainty is there, that you're probably going to see risk assets rallying a lot more. And this is where things get even more interesting, in my opinion, guys, because if you look at small cap stocks, like, look, I know that like large caps have already rallied. In my opinion, I actually think large cap stocks have probably topped. But the thing is that people forget that there's also rotation within large caps and small caps. If we do get a dovish Fed, and if we do get a positive meeting between Trump and Xi, then don't be surprised if we start to get a rotation from large cap stocks into small cap stocks, which are technically already breaking out above all-time highs. And what's really fascinating, it's a little bit trickier to see, to be honest, but if you actually look at the price action basically since early October in small cap stocks, it looks like it's painting the exact same pattern that we see here, this kind of W bottoming pattern, that we've seen over the last couple of weeks. You see almost the exact same thing forming here on the Russell 2000. And of course, the Russell 2000 and altcoins are highly correlated. So if the Russell 2000 starts breaking out and rallying here in the next couple of days, then that's probably going to take altcoins higher. And as I've been noting before, if you look historically speaking, when the Russell 2000 finally gets a breakout and starts melting up, that has corresponded to an altcoin season, historically speaking. So I do think that this is something that could start sooner than people expect. Of course, it does assume that the Fed is going to be more dovish than expected. It does assume that the Trump and Xi meeting is going to be positive. But again, this is all stuff that we should find out roughly in the next 24 hours or so. So I guess just, fingers crossed and hope that all of these squeezes, all these patterns here are a bottoming pattern, and that we will start to see a surge higher in Bitcoin, Ethereum, Solana, and of course other altcoins eventually. It always starts with Bitcoin and the large caps, and eventually the small caps follow. That's what's happened in every single cycle, and I don't think that this one is different. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel. channel, ping that notification bell. I'll see you in the next one.